what they really need to see if the market's going to correct into like more normality is a ceasefire deal. And it's that classic thing that European refiners are meant to be the weaker refiners because they can't produce as much high value products that, you know, all the Middle East refiners that have been set up in the last 10 years or even 5 years are all geared towards making more gas oil and running heavy crude. But all of a sudden it's like, well, actually the European refiners are kind of in a position, they're producing gasoline and heavy fuel oil. That's actually perfect right now. So it's a weird dynamic. And I guess that's why refining margins are so stubbornly strong.
Yeah, bizarre. You sort of want a refinery from like 25 years ago. Yeah. Like the old Russian refineries that just used to kick out fuel oil for the tanks.
But isn't that ideal thing to say? Is the missing piece not Russia? Because the Russia fuel that was so staple in its supply to the Mediterranean,
it's true actually,
is going in different places, and yes, fine, making its way back. And we have got a price cap that allows Russian flows to flood, but it's still redirected. It's not a question of fuel used to so directly impact Med. I don't think that's the case. And maybe that's exactly what's going on. And that needs to change. So maybe for fuel markets, what they really need to see if the market's going to correct into like more normality is a ceasefire deal. And refiners being able to produce back into Europe, but then Europe are very clear saying we want bans. We don't ever want Russia oil again. But again, this is signaling from politicians, and economics probably does always win. But that's quite a lot of niche stuff there, but really important, I'd say.